Welcome to the Crypto BS Podcast. I'm Craig.
And I'm Al.
And you gon' learn today.
What an intro today, Craig. That's a little different.
I'm getting creative.
Well, we've got a couple of new things to talk about. Generally, on our cast, we bring you world news, the news that is moving the market, and a little bit of our crypto calls. But we've got a new series that we're going to push over the next several weeks involving our rules of trading. Craig, shall we discuss these rules, or do you want to talk anything about the markets at all?
Let's get into the rules.
The rules. So, Craig, rule number 1, be patient. Rule number 2, have a plan. Rule 3, scale in, scale out. Rule 4, know your patterns. Rule 5, check the chart. Rule 6, RSI before you buy. Rule 7, when the pattern breaks, execute. And then lastly, your favorite, know your limits.
I have none.
So those are the rules that we're going to discuss over the next several casts that we're going to do. But we're going to start today and kind of do a little bit of a deep dive into be patient. Being patient is one of the hardest things I have to do, and I very much struggle with this. Do you feel that being patient is an issue for you during your trades, Craig?
Absolutely. Now, I have my days where I follow the rules and everything goes more or less smooth, but sometimes I get a little excited and I say, you know what, I'm doing this, and then I do it. And sometimes that works out and sometimes it doesn't, but it would probably work out more often if I would be patient.
We might need to add a new rule to this, which is follow the rules. Because we both struggle with following the rules.
That can be rule 0.
That should be rule 0.
The rule 0 is follow the rules.
It should be rule 0 and rule 10. That way you say it at the beginning and you say it at the end.
I like that.
And that way you got them all. The being patient portion of it, it helps once we get into the have a plan part. But having a plan, knowing what you're going to do, going over the charts, doing the RSI before you buy, being patient until you get all of those elements lined up is important, and that keeps you from FOMOing in the fear of missing out, and going in as you're seeing those numbers run up. You're watching Ethereum going and it's climbing. Right now it's at 1540, but all of a sudden you have a big green candle. It starts running up. It hits 1600, breaks to 1605, 1610. You're like, okay, here it goes. It's going to run. And then you jump in, and as soon as you put your money in, it's gone. Mm-hmm. It starts falling. You're like, what just happened?
And a good example, but a different situation is, I talked not too long ago about the shorts that I was in my personal accounts. And I don't remember exactly what those were. I believe one of them was Shiba, and Burger was another one, where it had went up and I came in on the short, and it continued to go up somewhat and then pulled back. And on either side of that, if you would have been the person that came in after the push and bought in, wanting it to continue to go up, you would have been up for a short while after that, but it would have inevitably came back down on you, which we can re-reference this example in some later rules. But especially in the short, it went up, I got in on the short, and then it continued up. Some people will get scared and they'll just get out because they don't want to lose more, right? They're already down and they said, oh, I was wrong, and they get out. Whereas you can have some other strategies to help better yourself in that short, like scaling in. But most important is you have to be patient in that, because if not, and you exit, you just take the loss.
Right. Well, so this is a rule to keep you from going in and losing money immediately. But the being patient part also falls into how much money you make and being patient as it's going up. and not exiting too early. If you exit too early, that means you weren't patient. And that's also a problem because you didn't maximize the gain. And that's really what our rules are here to help us do, is to maximize our gain and minimize our risk. So that's one of them. When you find that you're not patient, Craig, you've either entered early or you're thinking about entering early, you're ready to just jump right in. What is it that makes you become impatient? Are you generally an impatient person to start with?
Yes, admittedly. But what gets me impatient in crypto is I get excited about one piece of information and I act on it. And I don't take my time to look at the other data points around this entry. So a recent example with the Ethereum long from last week, 2 weeks ago.
Yeah, it was 2 weeks ago.
2 weeks ago. It was 2 weeks ago, where I saw Ethereum pull back and I said, you know what? I like this level. I want to long it. I didn't look at any previous support levels. I didn't look at the RSI. I didn't look at anything. I didn't look at market news. I just said, I like the level. I want to long it. And I was saved by divine intervention from Gary not being available on KuCoin. So I got lucky. I was forced to be patient. But if I would have went in on that long, I think at this point in time I would have been about even, maybe slightly down. But I would have been waiting this whole time over the last week or two to come back to even.
It ran back up. It just, at that point,
it went down the next day.
Yeah.
That's all I know.
Yeah, it did, but it's come back. But
either way, it would have been
rules too, though.
It would have been a situation where I wasn't patient. I entered and I was immediately down on a trade and sustained for at least a short period of time.
For you needed to be patient long enough to check the chart and check your RSI before you buy. But so that's how some of these kind of flow together. They help kind of support each other. And these are rules that Craig and I have put together over several years of trading. And these are the ones that we agree on, because we've got a couple of other ones that we did not mention that one of the two of us disagree, because we disagree quite often. But again, that comes back to the risk part of it. Do you find that you are, when you're putting together, say, a short-term trade that you're planning on, like you're looking at it, you're thinking, okay, I'm going to get in and get out in the next couple of days. Do you feel like that's a time when I feel like I'm more apt to be impatient, because I've already predetermined that this is going to be a short trade, and if it moves opposite of what I had planned on it, even in a short period, okay, I need to go ahead and get out of it. Is that because I've risked too much on something I wasn't as sure as I should have been, or vice, or I'm not sure really exactly what it is. But that's the time that I feel more impatient, is on my shorter term trades. If it's something that I'm longing, for our game, I'm not worried about the Cardano, the money that I put in for Cardano. I put in $100 for it. I've set it over there on a stake. I'm just letting it go because it's long term. I don't care if it goes down to 20 cents. I'm not going to pull that out of there. I'm just going to let it sit there. I'm not worried about it. But on a short term trade where I'm trying to get in and get out, that's where I feel more compelled to exit earlier than I should. Do you experience that at all on those shorter term trades?
I would say yes. That's probably the only time I really get impatient, because anything that's long term, I mean, it's inherently more patient, right? I mean, it's hard to be impatient with something you plan on holding for more than a week or a month.
But that would be rule number 2, have a plan.
Indeed.
Having a plan to hold it for a couple of months, yeah, you're not worried about it. Having a plan to hold it for a couple of days and it's already turned, and maybe that comes down to the leverage too. If it's leveraged, I'm definitely more apt to be ready to get out sooner than if it's just spot and I've got on there, I can just let it go till it comes back. And it may be a week or two, not a big deal. But if it's leveraged, then you've got that time starting to push on you for however long you've leveraged it for, and you're feeling that the whole time. And that's kind of the downside of leverage trading. But there is a time to not be patient and to be impatient, and that's on a losing trade. How far into a trade that you've made before it starts coming back are you ready to get out on? Or even when the whole market turns, as it did 10 months ago, for me, that was a time when I should have been more impatient and got out sooner instead of being patient thinking it was going to come back.
I think the easy answer is to say that if you have a plan, your patience is planned, right? If you've determined what levels you want to get out at, or if you've determined what support lines you see that you're willing those prices to go down to, and if they break that you want to get out. But I know that's the easy answer, and the real answer is that when you get there, that's when your patience is tested. Because there's always a small part of me that says, maybe this is the bottom, and I don't want to get out, right? I don't want to get out. That's like, for example, the Bitcoin $20,000 level that I've brought up every week. We've tested it again. We've came down below 20,000 into the 19s. And at what point do you start losing your patience with the level of, is this the time that it breaks? Or is this a support still? And how many times do you let your patience be tested on that, on your plan, on my plan of I like the support between 19 and 21? At what point do you say, I've had enough, I'm out? And I think it is based around the plan. And then some of it or all of it after that point, when you get to the point in your plan where your patience is tested, it comes down to how much risk are you willing to take. If you are zero risk, if you want to play it as safe as possible and your level hits, you're out. And if you're 100% willing to risk it all, you're never out. So I think everybody's going to have a risk that they're willing to take, and that's going to adjust their tolerance to their plan somewhat. And I think that is the real answer on how patient are you in a losing market.
That was it's pretty intelligent speaking you had coming out there. Yeah, I know. All right, well, so where would you say that you are in general right now as far as risk? Since we're talking about risk, which is not anything to do with our rules, but would you say on a scale of 1 to 10 that you fall into a 5 as far as being risky or risk averse? Would you say that you're in the middle? And let's start with just the crypto side of it. When you're looking at your crypto portfolio right now, how much money that you've invested in it, whether you're up or whether you're down, how much dry powder you have sitting on the sidelines ready to enter when it does bottom, and how much are you willing to risk? How do you feel right now on that scale of 1 to 10? Are you risk or risk averse?
I would say that on average, I am a 5 to maybe 6. We'll stick with 5. I will say there are times where I am more of a 7 or an 8, and there are times when I am more of a 3 or a 4. And I will admit to having some fun in the more recent months of playing with some more riskier stuff with the $50,000% or 50,000% APY escrow coin farm, and playing with the Cronodes finance stuff, and playing with little money that I'm willing to lose and then inevitably losing it. But as the play money starts to run out and you take enough hits, I become more and more conservative and less risky. But I think I'm at a point where I believe 90% positive that at some point in the next 5 years, the market will come back to maybe all-time highs, but at least to good levels like $40,000-$50,000 Bitcoin. And with that, like, I'm okay with buying into big coins now. And I don't think that's very, like, if you want to take a scale of 1 is I'm staking stable coins, and like a 3-4 is you're buying the big names, Bitcoin, Ethereum, so on and so forth. And then you want to take a 5-6 is maybe some coins down the line like Crow or Ripple with their litigation stuff, but they're still a bigger name. And then you'll even higher to, just the cheap coins like Burger, for example. That can be your 7-8, and then you start playing with margin trading and your escrows and your chronos is your 8, 9, 10. I'm definitely out of the 8, 9, 10s. I've had my fun over the summer. I'm coming back down. I will hold a few of the not big names like Crow. I'm a believer in. So I'm slightly into the 5-6 range, but most of my stuff, I'd say at least 50% of my portfolio is Bitcoin, Ethereum, Cardano. And with that, I think that makes my rating a solid 5.
How much different is your current portfolio versus your challenge portfolio that we trade on, that we do each week, where we put in our $100 and with the intent of growing it to $100,000. So with that one, it's a little bit different because our intent is to grow it to $100,000 as quickly as possible. It's a little game between you and I, and it's a little bit of a race, but obviously it's going to be a long-term race. How much different is that portfolio versus your normal portfolio? Or do you have two separate plans for this? Do you play them differently?
Well, I will admit that the challenge portfolio is going to have to take some rethinking. But as it currently stands, and really both, I always want to rethink all of my assets, but specifically to the challenge versus the regular portfolio, I mean, for the challenge, I'm just in Bitcoin and Ripple. So as far as risk adversity, it's about on par with where I'm rebalancing my usual accounts now. Where I want it to go will be about the same. You see, the difference in thinking between you and I on the challenge is that you want to grow the account as quick as possible out the gate with the margin trades, so that when the market starts moving, that same percentage is a higher dollar amount. And I don't want to take the risk with the margin trades now so that I don't end up under, right? So my thinking, at least at the start, is I want my asset value to grow, and then I'll be willing to margin trade the profit or the growth amount, because it's not truly profit, but take the net gains and margin those and try to exponentially grow those. So I'm staying very conservative with the Bitcoin bot, with the Ripple bot, and when the market starts to move up, then I can take those gains and start trying to make some bigger strides.
How's that bot working out for you?
Well, the market's pulled back. And let's pull up the bot real quick. I know we checked on it yesterday, and it was down slightly since inception, which is not what we want to hear whatsoever. But the market has came back ever so slightly since.
Well, we're currently on week 10. Tomorrow we get allocated our next $100, so it'll be $1,000 that we'll have allocated into it. I'm currently up a little over $400, and I'll be looking forward to doing it. I've hit a couple of shorts. I did get caught in an ETH short yesterday, 2 days ago, and I got stomped out and flipped it around, got into a long, and then took the profits on the long. I hit pretty close to the top with it, but didn't catch it fully flush. I did not flip around and go into a short with it, although if I would have done that, I would have been absolutely killing it. But I missed that. So right now I'm all on the sideline waiting for this to shake out. I'm kind of concerned for the weekend because I know we're not talking about news today, but there is some news that's coming out Friday, economic news, job numbers, that type thing, and then it's a long weekend where we'll typically see a pullback. So for me, it's not all about the fundamentals. That's part of where you and I disagree on some of the rules, because I like to look at some of the world news and how that's going to impact us instead of just the technical data that's out there. But so how does the bot look right now?
So it's hard to give very accurate numbers with this, because when you reinvest into a bot on KuCoin, obviously your entry price moves because now your average buy-in is different, but it doesn't show you what the new average is. It just puts a line through your initial entry price. So I can't tell you what my average is now. I can only tell you that it is slightly less than what the price is now, which the price is at 19,985. Now, my initial entry price was at 19,789. So from week one, I would be very slightly up with a grid APR of 23% still.
That's nice.
Which again, that would be 23% over a year, because that's the APR there. But it would mean that I would be slightly up and slightly up even more in my grid. One thing I will say is that even with me dollar cost averaging in over the last, I put 5 weeks worth in here. So I dollar cost average 5 weeks, obviously raising my entry price on average because I'm down on the unrealized P&L. That the grid has almost 1-for-1 made up all of those losses. So dollar cost averaging alone, I would be down. Dollar cost averaging into the bot, I'm even.
So strategy going forward, are you looking at reloading into the bot? Are you looking at getting out of the bot? Are you going what this?
Well, I think the bot has served the bot has served the purpose of maintaining value while waiting for opportunity. It was better than holding Bitcoin on the sideline, but it was no better than holding stablecoin. But if the market would have went up significantly, the stablecoin would have done nothing, and the bot would have had gains. Bitcoin alone would have had more gains than the bot because you'd have all of it in instead of a split. So the bot served a purpose as a hedge against the downside while still the opportunity to participate in the upside. So it was in the middle of buying, more or less. And I'm happy with that. But I think it's time to get down to the basics of how I first started trading. Now that we have a little bit more into the pool of money to use, we have step 2 on our rules. Rule number 2 is to have a plan. And at the very basics of my plan, I think how I've traditionally invested in the past is to look at the charts, look at the patterns, which we'll get into in later episodes down the rules. But I want to look at the charts, look at the patterns, determine my support and my resistance, and then find an opportunity with the RSI to buy the Bitcoin, and then the opportunity with the RSI and the patterns to sell the Bitcoin, and just try to hit trades. And if I miss, hopefully I hit more than I miss to end up, but I'm not margin trading. So if I miss, it's not going to be a big miss, thankfully. And I think it's time to get this challenge back down to the basics. Now I'm going to leave my $100 of Ripple in there for our Ripple versus Cardano section of the.
I forgot about that.
Yeah, so I have to leave that in there, mostly because I already beat you on Burger, so I want to beat you again.
Ouch. Well, this is a long one because it's a year-long bet on that one.
But that's staying in there. Otherwise, I will be looking for my opportunity to exit my Bitcoin bot with the intent of finding the supposed right time to re-enter. And just do regular trading, buy, sell.
Do you think that right now we're at the bottom? We're hitting that 20,000, just under 20,000 mark that you love so much.
This is why I'm leaving the bot, because I don't like that it's retesting it again, right? I don't like that we keep coming into the 19s, but I am a firm believer of the support band between 19 and 21. So I do believe we're around the bottom. I'd like to see these numbers on Friday. Otherwise, I will be looking for a time to get out of the Bitcoin bot directly into Bitcoin to ride that up.
So are you going to plan on getting into it if it's going down? Are you going to still get? Are you going to let it go down? If it goes down to 14,000, are you going to get out?
See,
then?
that's the beauty of the bot, is that it'll hedge against the downside for me on Bitcoin. That's why I'm not getting out of the bot yet. I want to see 20,000 get reestablished very firmly. We went back into 20,000 today, but it's back down just below it right now. So there's not an established 20,000 yet. I want to hedge the downside with the bot, but I definitely want to get out of the bot in the 20s. If we see it go back up to 21, I'm probably out of the bot into Bitcoin alone.
Well, that's scary to me, because to me that would be the next lower high if it hits at 21,000 and then comes off of that and drops back down.
Well, I want to see what the RSI is of that too, right? If we go up to 21 and I'm looking at a 67 RSI, that's not the greatest time to push all of my stuff into Bitcoin, because that's one of the many indicators that might be coming back down soon. Mm-hmm. So there's multiple factors into this, but if we can get up to 21 and maybe even up to 22 and a pull back to 21 and it stabilizes and I'm looking at an RSI of 40 isn't low, but I'm happy at an entry of an RSI of 40, especially coming out of a bot where I already have some Bitcoin. I'm just transferring the rest of the USDT into it. That's a decent entry for me.
Well, sitting here looking at our show notes, and you still got a couple $100 on the sideline,
mm-hmm.
and we'll be getting our next allocation on Thursday. So put you, I think, around $300, and you'll be ready to reload. Are you going to do anything specifically with it, or are you just going to let it sit on the sideline until after this weekend?
The plan, to follow rule number 2, is to stick with. I'm really eyeing Bitcoin only because I find it more predictable. But let's say at least the big names, the top 5s, excluding Ethereum, because there's too much news coming out on Ethereum that one bad news day and the price swings too much. And it'll affect everything else too, but it'll affect Ethereum more. So top 5 minus Ethereum, and I will just be looking for the right entry point. I'll be watching the RSIs, I'll be watching the charts, I'll be watching the behavior around the supports, and I'll be buying in when I think the time is right.
Are you looking to trade out of this, or is this going to be a buy and hold for a while?
This will be traded out of. I'll be doing the same thing on the upside.
You're just going to do a spot trade then?
Yes, and I'll still be looking to the charts on what's the pattern look like. Is the pattern breaking? What's the resistance bands that I'm like a target resistance bands? What's the RSI? Is there a resistance on the RSIs? We can look at Bollinger Bands. There's a lot of indicators I'll use for when I want to get out. And then on top of that, I'll have to know my limits that I want to put in place in case some of these things hit while I'm asleep.
Okay. Well, I think we're moving along pretty good. Do you have any would you rathers in line for today?
Well, I know you said you had one ready for me, so why don't you hit me first?
Well, yeah, that's what I was trying to get at a little bit earlier today, with wondering where you were on dry powder allocated towards what we've got, because in our previous show, we had a fairly deep discussion on you wanting the market to go up 100% in a day versus me wanting it to go down 50% in a day.
Mm-hmm.
And really that kind of revolves around, and you mentioned it specifically, well, how much money we've got in the market versus what we got on the side. So my question to you is, moving forward over the next 3 to 6 months, and not knowing, because that was the other really big catch with our discussion was knowing for sure that is we don't know what's going to happen over the next 3 to 6 months. Are you okay with it going up 100% or down 50% over the next 3 months with what you've got in the market versus what you've got on the sideline? Again, you don't know that it's going to go up. But for me, whether it goes up 100% or goes down 50%, I'm okay either way.
So what's the would you rather?
Well, I guess it's would you rather it go up 100% or 50%, but over a greater period of time. And
Because the problem with that is that you want to take out the known, but in the would you rather, you make it known.
Well, and you're right, and I don't know how to ask that question, but going forward, I don't know. Would you rather have 50% of your money on the sideline and the market go down 50%, or 100% of your money in the market and it go up 100%? Maybe that's the right question.
I'm still on my side. If I have 100% of my assets in, okay. So the difference is the amount in. We're putting that in there. Would I rather the market go down 50% with only 50% of my assets in, or would I rather the market double with all of my assets in? I'd still rather take the gain. I'd still rather take the 100% because even if that's over the next year, there's no saying that that's the end, right? It can continue up past that. It could pull back and I could exit at 100%, buy back in and go. Now, a lot of that is what happens if I mistime it, if I don't re-enter, if I don't get out on time. There's a lot of what ifs, but there's just as many what ifs on the other side of the market goes down. What if I don't enter in time? What if it keeps going down? And so I'll take this scenario in which I make money.
Well, maybe I still haven't asked the question appropriately, because I feel like where you're staged currently in the market tells what you truly believe. In that, do you believe the market is going up 100% in the next 6 months or down 50% in the next 6 months?
I don't believe either of those, but
well, if you're looking at, and what I'm getting at is like the likelihood of those things happening versus where your funds are currently allocated.
I think, well, first off, if we're talking which one of those scenarios do I think is more likely, I'm going with the 100% up. I think it's the more likely scenario in the next 6 months. There is a scenario in which I could see both happening. But if I were to...
Whoa!
You want me to go back to that?
Oh, man, you can't drop that.
Okay, first
it's
off,
likely that it's going to drop 50% and then it's going to rip up 100% from there?
Well, yes. Let me explain. We're at $20,000 Bitcoin. I know we're talking the whole market. I'm using one coin to just get a price point. But if we're talking about $20,000 Bitcoin, do I see it ever being able to go up back to $40,000 in half a year? Absolutely. On the other side, do I think Bitcoin could ever go down to 10,000? I think with some bad news, yes. And then flipping back up 100% to where it is now, which would be the 100% gain, absolutely. I could see it going down to 10 and back up to 20. I could see that happening in a month time frame, not like a month from now, but within 1 month, I could see it go 20, 10, 20, just based off news. I think it's plausible. I don't think it's likely. I think it's plausible. I think the more likely scenario is 20 to 40 in half a year. I think that's very reasonable. We've seen that kind of stuff happen all the time. But if I were to change your would you rather for my would you rather, I would say it like this. Would you rather have no money in the market and it go up 100% over the next 6 months? Or would you rather have all of your money, all of your current allocated money invested in crypto, and it go down 50% over the next 6 months? So one gives you the opportunity to put more money in, but you're starting more behind the gun, right? Because you have all your assets in and they're losing half their value, but you get to reload with whatever money you make from your job, or maybe some savings you had, or some money you wanted to invest in something else, but now you're going to reallocate it over to crypto. And in the other one, you have no money in, you're making no money, you're losing no money, but the market has gone up significantly. Which one would you rather happen?
I don't want the market to go up 100% when I don't have any money in it.
So
that sounds horrid.
So you would still rather lose half of your assets and be able to reload, but not with near as much money as you have in it.
Yes.
Yes?
I mean, one of it is like, would you rather have no money in there and you're not winning or losing, or have the opportunity to get it all back? Give me the opportunity.
Okay.
Give me the risk.
See, this one is much more difficult for me because there is no upside on the side I'm usually on, because you have nothing in it, right?
Right.
But I still prefer it. And let me explain. I see the look on your face.
I just threw up in my mouth.
So let me explain. First off, I don't like losing money or value in assets, especially if all of my allocated crypto funds are losing half of their value over whatever period of time.
It doesn't sound like you make it like making money either if it's going up 100% with nothing in it.
I would rather make no money than lose money, but that's not the point I'm trying to get at. The point I'm trying to get at is, even at 100% up from today's prices, there's still upside left to be had. And it shows a healthy crypto market going from 20,000 Bitcoin to 40,000, or from, what's Cardano at right now? I haven't looked at it in a minute.
44 and a half.
44, we'll call it 45, it goes up to 90. It's been over $2 before. There's plenty of room. And at 100% over the next half a year, that's a slow growth, positive, bullish crypto market that I would love to be a part of. Now, I would want to see retracements in that bull market, but at least we'd be back into a bull market. Things are looking up. Things are positive. There's still room to grow before previous highs. And not just room to grow, we're talking 50, 60, 70 in Cardano's 100% gains left for room for growth. I'd rather go up, see a healthy market, find a retracement to get back into, and just hope I don't buy in and then there's terrible news after me. But the same thing goes for hope there's not bad news after the 50% that drives it even further. So I like the upside. I still like the no assets in 100% over the next 6 months versus all assets in 50% loss over the next 6 months.
That's the most disgusting thing I've ever heard.
And I knew you still wouldn't like it.
No, I don't like that.
But that just shows the difference between you and I.
Well, and hopefully that's what our listeners are getting out of the show, is the difference in the risk strategy, which, by the way, I'll take this time to remind everyone that we are not advisors in any way, shape, or form. But we did sleep at a Holiday Inn Express last night in separate beds.
Separate rooms. Thank you. Listen, if you're going to use a made-up thing, at least put us in different rooms.
It was off the cuff. I don't know what to say. But that difference in risk and risk strategy, for me, even in the challenge game, it's high risk, high reward. Last week I made $150 on one trade, but lost $60 on the next trade. And so I wiped out almost half of my profit on that just in two trades because I missed on the second one. And that's what Craig keeps waiting for, is for me to miss real bad on one of those. And it's only a matter of time. But, you know, again, that's where the risk comes in. But that's the difference in our two strategies. And during the next show, we'll make I'll go into a little bit more on my strategy when we do our Have a Plan show. So that's all I've got for today. This has been the first show of our 8-show series on our trading rules. And that's all I got. Craig, you got anything else?
That's all.
All right. Well, I'm Al.
And I'm Craig.
This was Crypto BS.